So let's think about it this way. Thank you for everyone's watching. If this is the first time, please do like and subscribe so that you can always watch our videos, which is happening every Friday. It's a Friday free class. 2022, the year of removing accommodation, tightening, and tapering. So if the crux of your thesis is that the Fed will continue to support the markets, the Fed will continue to be easy on monetary policies, the Fed would have looser rates, and so forth, well, within the next 2 to 3 years, the Fed has already suggested that they don't want inflation to be in high mode. And one way for them to stop inflation going ballistic is to actually curtail their loose monetary policies and to stop purchasing a lot of bonds. And that means that the world is also pricing in the Fed to actually imply a rate hike in 2022. So a lot of people are pricing in that by next year or December 14, pretty much you've got about 3 rate hikes, at least 3, and at least 1 hike in the first half of the year. Starting March or May or June, you're already seeing a potential rate hike. And so the market is already positioning for that. This source comes from Charles Schwab and from Bloomberg. And this is as of December 3, 2021. The Fed is going to report CPI data tonight. And if there's anything that we know, inflation has gone ballistic, whether it's real estate, whether it's commodities, inflation on energy and everything. And so it is very much unlikely for the Fed not to have a rate hike next year. Everyone's already positioned that way. And about these rate hikes, let's take a look on the first year, months prior to a rate hike, months after a rate hike. So this usually happens after the first hike. Take a look at this green line. This green chart shows you that it drops from 100 all the way down. And then in this yellow line, it also drops. And then this blue line, it also drops. And this black line, it also drops. Meaning the market history, historically, whether we're talking about the first hike, a slow tightening cycle, a fast tightening cycle, or a non-cycle, it falls. So you've got 4/4. Whichever cycle you think about, on every first hike, you get a drop. So the market is already actually thinking that by January, February, or March, somewhere within that year, 2022, we're going to get a drop. And some people are already shorting since November, and they're going to get more growling this December. And by January, February, you're going to probably see a potential crash and a collapse. I don't know how big. Is it going to be like a 10% crash, a 20% crash? And that's just the index crash. Obviously, there will be a lot of froth that will be killed, 50, 80% drops. And so it is very mindful to take a look what's really happening. And we know that there's carnage underneath the surface. And our stance is we want to short the companies we think are overvalued, had a parabolic rise, and will not sustain those levels and perhaps fall 30, 50%. Because if it's just going to crash like the index, what's the use? So, and the index can also stay afloat, by the way. So it's better to actually short the weakest links. Okay, so also you'll notice that after the rate hike, somewhere within the next 4 months or 6 months, you then get a bottom wherein people will bargain hunt all the way. And then it just goes up. Either it goes up until December, or it goes up and then August, we get another crash. August, September, we get another crash. Usually we do get those crashes. It's a cyclical, historical thing. Filipinos like to call it the ghost month. Americans like to talk about the summer because August, September is their summer. But if you're going to schedule your vacation, perhaps schedule it around August or somewhere there. Because usually you do get a crash. It could be a higher low by then if we do get a crash on March or April. And then we rally. And then we'll see end of the year. Sometimes we crash again. There are cycles wherein you crash after August. It just goes all the way down for December. Or after an epic crash in August, we just go straight to the moon by December and then straight to the moon again by 2024. 2023 to 2024. So that's your kind of playbook around Fed rate hikes using historical guides. So of course, this may not be the same case for this next few years, but it is still useful to take a look on historical groundwork on what usually happens with a first hike and a second hike and so forth. So usually it's just the first hike that gets people agitated. Kind of reminds people in the May 2013, remember taper tantrum? If you were actually aware of that first rate hike, people are also scared, but eventually it did pass. And of course, anyone who bought the FAM gas in 2013 knows that they were making 5x, 10x money 8 years after. So obviously, a rate hike means that some people will just sell anything. And when they sell anything, that spells opportunity, especially if they sell the likes of the FAM gas. We're talking about the Amazons, the Microsofts, and Facebooks. If they do sell it off somewhere next year, you know where the market wants to buy them. Okay, so that's just something to share. Now, I just wanted to share that this is a meme that people shared 2 weeks ago versus this weekend. This was December 5, 2021, tweeted by tweeted by Dr. Growth. Now, you'll notice that among the crypto community, Michael Saylor is one of the most proponent Bitcoin maximalists in the world. And actually, with the Omicron variant sell-off, he purchased another additional 1,434 Bitcoins, a total of $82 million at about $58,000. Now we know Bitcoin today is roughly trading about 48,000. That means he lost roughly $15 million within a span of that hour, within a span of a week. And the thing about MicroStrategy is that they do own roughly 120,000 Bitcoins. So 120,000 Bitcoins times 10,000 is a loss of roughly 120, was that $120 million, or is it $1.2 billion? Wait, let me just math it out. You're right, it's $1.2 billion in valuation for MSTR. I'm not quite sure how any MSTR shareholder is actually okay with it. Now, you could argue that their share prices are very much purchased at an average cost of 30,000. But how does it feel if you're sitting with about $3 to $4 billion of profits and none of it is actually being actualized? It's all unrealized. So I think that a majority of Bitcoin hodlers, and this is the mistake in my view of most of them, they like to write things up in a bull, and then these bulls are just like pigs who will get slaughtered. We talked about bull pigs getting slaughtered around January 2020 to 2021. Sorry, not 2020. We're saying December, January, February 2021, when the market was rising all the way up, pigs get slaughtered. We did think that the market's gonna fall. We just actually never thought it would fall this much. I think like cryptocurrencies are actually not also aware that it could fall maybe 40, 50%. They actually make money from for the appreciate our content. Just like this meme, you might look like a god today. Don't remember, and you could be a billionaire and a certified billionaire. But if it's all unrealized gains, you could just be the same picture like these. So the advice is really take some profits, even if just half. Because at the end of the day, nobody can actually predict the future. You might say you can, but it's better to take some froth off. And some people, in our case, would actually short the froth. One of the froth that you could see here is definitely MicroStrategy. I don't believe in the hodl all Bitcoin strategy, especially if you're holding billions of dollars worth of unrealized profits. So the thing about MSTR is that they are, in my view, a Bitcoin leveraged fund. So essentially, it's a leveraged fund wherein the entire market cap is essentially tied to Bitcoin holdings. And initially, of course, when Bitcoin was just going up and away, and there wasn't any sign of slowing down, MSTR indeed had its life go up from about 100 to 1,300 in just a span of about 2 months. So about November, January, February, when crypto stopped rising at $60,000 and fell subsequently to 30,000, MSTR actually fell harder, about 130 to 300 or 400 here. Now, when crypto rose, BTC in general went all-time highs, another all-time high to about 69,000. Notice the bearish divergence here. Because I believe there are people who also think that MSTR shouldn't trade of BTCs. If they like Bitcoin, they wouldn't buy MSTR. They'll put Bitcoin in their own wallets, their own private keys, their own, because that's what a decentralized world means. Not through ETFs and not through Bitcoin-related stocks, which is what MSTR is, right? So this is more like an actively managed fund, except that it's not actively managed. It's not an actively managed BTC fund. Because if it is an actively managed BTC fund, you would have seen a little bit of profit taking, which is not happening. It's not happening simply because we know that MSTR, Michael Saylor, says never sell, right? So he's a hodler. Essentially, what he's saying is that if Bitcoin fell $30,000, MicroStrategy will then become $300. So that's essentially what he is saying in his tweets. So I would argue that if you think that Bitcoin goes sideways for next year because crypto is a risk-on asset, then you'd see MSTR fall in the same vein with leverage, because MSTR, of course, issues shares to buy Bitcoin. So that's how they handle all those cash holdings. They don't have cash in their balance sheet. They only have crypto, aka BTC. They didn't take profits at all. Now, about the Bitcoin miners, the same thing can be said. All of them refuse to sell. All of them are just hodlers, which makes them an easy target for people who think that it's a cyclical asset. It's a speculative asset, just like a NASDAQ. NASDAQ has booms and they have busts. Now, yes, it will boom again, but without preparation for a potential bear market. You know, we always say, prepare for the arc, do not predict the rain. These people are not prepared for the rain. That's why we think from a balance sheet perspective, if a rain did happen, not only would they fall with Bitcoin, let's say Bitcoin falls 10%, they'd fall harder. They fall harder and they won't make all-time highs, even if crypto goes up. Because by then, either they are in debt or they don't have cash, or they need to sell at the worst time possible, which is even worse. I don't know if they will ever have to sell, but come times when it's harder, if there will be redemptions, they will be forced to do so at the most untimely time. So right, blockchain, notice, even when crypto was rising, it's been lower highs. Just like MSTR, you'll notice lower highs, $80, $50. Now it's trading $26. A breakdown of 23 means that right blockchain goes down south about 10. Could it go down to about $5? We'll see. Hive blockchain, also the same. This is a Canadian crypto miner. Most of them have the same policy. They all believe that the Bitcoins they mined are not for selling. And that, in my view, is a problem because you have operational expenses at the end of the day. You've got to pay for electricity at the same time that you are producing your Bitcoins. I don't know what type of risk management they have wherein you produce Bitcoins, you do have some cost to it. And it seems as if they're all just, I'm just hodling forever. It could be a Bitcoin maximalist mantra, but it doesn't seem like a good mantra for a business model. So Hive blockchain goes cyclical moves. 50 cents goes $5. Who knows what they'll become within the next year? $3 goes $1.50. Even if crypto is adopted, if you don't have a game plan for your operational expenses, I don't know really how all of these blockchain technologies and Bitcoin miners can prepare for a potential bear. You build on a bear. You build a war chest. That's what you do. In a boom time, you build a war chest. You've got a 10x and you don't take profit. I don't know how they'll last in the next bear market. Marathon Digital. Marathon Digital just issued another $500 million of shares. Well, if you're making so much money with your Bitcoin holdings, why then do you have to even sell shares just to purchase more Bitcoin mining facilities? At the end of the day, you'll see that most of them are trading at 5 billion market caps, 4 billion market caps, and take a look on their treasury reserves. Maybe you just see something like, sometimes you'll be lucky, you'll get 1,000 Bitcoins. 1,000 Bitcoins at 50,000, it's not 1,000 Bitcoins. Some of them do have 1,000 Bitcoins, 2,000, 3,000 Bitcoins, but others don't. So in general, Riot and Mara, Bitcoin holdings against market cap, too low. It's even worse actually than MicroStrategy. So we are aligned with the shorts here. Continue shorting these Bitcoin miners. They just don't produce enough Bitcoin. So you could be bullish on the asset, as I said, but if it is an inefficient miner, you're better off not owning the miner and just owning BTC yourself. You may not be a miner, so what? You can just buy it on the exchanges or from peers. Bitfarms, also the same. Canadian miners are actually more transparent about their Bitcoin holdings and how much they produce. Bitfarms just released about 300 Bitcoins. They said they produced 300 Bitcoins last month. Last month was it, or 293, but it was not enough to satisfy shareholders. That's why after earnings, it fell down. So for most people, they see that the production rate is still too low versus their current market caps. So Bitfarms could fall back about $3. Probably not $1, but still, it has leeway to fall, 6 to 3. 6, 7, a short. Hot mining, even at 10, 11. So you're noticing with the market ongoing correction for cryptocurrencies, you've got a bigger short potential on all these crypto miners. Hot mining, 16. So this rallied from 4 to 16 times 4 when Bitcoin rallied 30,000 to 69,000. Could it go back to at least 6? We'll see. We'll see. But the market is your friend and the trend is downwards. Argo Blockchain, a London miner, also listed now in NASDAQ. Almost all of them got pushed up because of impending crypto adoption by institutions and a lot of institutions. My view is that the institutional adoption is to essentially short them, participating in the short side, not really participating on the long side. So actually being short the blockchain miners. Cryptocurrencies, after a rally to 69,000, the hype was all about Bitcoin ETFs. After that, it seems as if there's no catalyst for now. So in the next few months, we'll probably see sideways action. I would agree that there are BTC maximalists, there are institutions who are adopting heavily, owning 5% of their entire net worth to crypto holdings, specifically BTC and Ethereum. But with all these double tops happening with BTCs, it seems as if they're also in agreement. The charts are also in agreement, objectively speaking. Lower highs means a drop perhaps at 30,000. Yes, you've got a support at 40K, but the fact that it's actually trading below 55 and 57K, we do have the bears in control in the short term. So I think in the next 3 months or 6 months, with an impending Fed tightening, it lessens the case of people saying that the Fed doesn't know anything but print money, burr, burr, burr. Those memes about print money, print money, print money. Well, if we're going to tighten, that print money thesis goes away a little bit at the very least. We're still talking about trillions of dollars of deficits in terms of the monetary stimulus, yes. But at the end of the day, when you're signaling a rate hike, when you're signaling a Fed tightening, it also means cryptocurrencies, specifically BTC, has less of that firepower oomph to say from a macro perspective that it's a safe haven asset. Dollar could actually be rising. Ethereum dollar, the NFT craze was a wonderful craze, but as with all crazes, some musical chairs sometimes stops. So the casino could be stopping now at about 48, 46. We could be seeing a double top here about 4,000 to 48. The downside is as far as $3,000 or maybe 2.6. I understand people want to own a piece of the network of Web 3.0, and the world believes that Ethereum is a proponent of that Web 3.0. And definitely there are more ETH maximalists or ETH flippeners rather than Bitcoin maximalists. Yes, I do also agree with those relative strength on ETH versus BTC. You can see that ETH is trading at 4,000, whereas Bitcoin is trading at 48,000. That already tells you that ETH maximalists or ETH flippers rather than Bitcoin hodlers are a function of the environment that the world believes I can do more with Ethereum and I don't do much with BTCs except to store it in my wallet. So indeed, the world is adopting the use cases of non-fungible tokens, whether that be ETH or another network like Solana, that's up for debate, or Binance, right? So you've got a lot of smart contracts, and smart contracts is on the rise fundamentally. I also believe in that. So from a cryptocurrency standpoint, will Bitcoin and Ethereum continue to be in war zone? Yes, people believe Ethereum is perhaps more deserving of the #1 status. I don't know, let them be kings and queens who fight over themselves. End of the day, they are the famgas of crypto. Indeed, BTC and Ethereum is the famga of crypto. I'm not bearish on it long term, but since you're really looking to invest, you want to actually see them drop. Because do you want to pay high or do you want to pay low? That's about it. Grayscale BTC ETFs are also getting shorted in line with BTC. GBTC is falling further. You'll see that it's illiquid. There's not much liquidity on these names. Ethereum is still strong here at 44, 46, 38, which tells you, I mean, from a strict relative standpoint, let's talk about technicals. Would you want to own Ethereum or would you want to own Bitcoin? 90% of the charts say you should be owning Ethereum, not Bitcoin. You may disagree, but that's what the charts say. The charts say own Web 3.0. ETF, also you've got NFTs. Now, a timely fund who wants to make money on companies that announced NFTs, we are shorting them. Whether that be Playboy, well, I'm more short on Playboy. I actually believe there is a use case for Funko. I just am avoiding Funko. I am deep inside a bull on Funko, but I mean, if I could get Funko at $10, so be it. At $17, $18, $20, it just can't go up. So I just have to, you know, at the end of the day, if NFT is still a very early craze, and I do believe it's still very early, the first thing that you want to do is actually short NFTs for now. And any company that has announced their NFT world, well, Adidas is in the metaverse through some crypto, they've got punk comic collections, they've got Btc, Bored Apes Yacht Club collections. I mean, I think that in general, brands know how to make money on a craze, and Adidas knows what to do with it. Disney knows what to do with it. But at the same time, you don't actually buy into an NFT craze not getting an exit point, right? So indeed, I think like it could have been, it could just get worse. The charts also agree. So NFTZ, this is a timely ETF that just launched for us to short them. NFTZ is a good short. Now, this isn't my view, but I also would have to agree. Timothy Sykes is more well-known on penny stocks. But just like him, he's not afraid of calling a spade and expect the worst in 2022. He is saying that although he's not deeply involved in trading cryptocurrencies directly, I have not shorted anything in 2 years now. Agree. 2020, 2021, you don't short when the macro is all about printing money. The thesis then was just print, print, print. And therefore, it would be surreal for any trader who understands macro to short crypto. That's why everyone was like, okay, just let the bubble go, go, go. But nowadays, it's very clear, objectively speaking, we've got a Fed tightening policy. Now's the time that you can actually short the bubbles. There was a time when I really didn't care about valuations, because why would you care for valuations when the world doesn't care about valuations, right? You only care about the valuations if the world will care. And nowadays, the world cares about it. So now's the time for the shorts to unveil their real shorts, their real short positions, right? And so I would argue that BTC and Ethereum has leeway to fall. So you want to prioritize profits, right? And you might actually want to short one of the big, I don't know if you want to call it a bubble, but there are a lot of froth. Let's just say it's froth, right? So you could make some profits on the way up and then a few profits on the way down. Signs are all not encouraging. This is something that even Elon Musk has been saying, and even China has also said. If you listen to the Wall Street Journal CEO Summit, it was just a week ago, I think, or was it just a few days ago? Joanna Stern, the WSJ editor for tech, interviewed Elon Musk. And in one of the questions, Elon Musk did say that in a joking manner, but you know how his jokes are also half facts, half truth, half truth, half meant, right? So Elon Musk said that he's doing his part because the bigger worry he has is about the population. Unlike the notion that we are actually in an epic overpopulation world, he believes that the demographics in the long term is that we are not actually producing enough human beings in the world. So basically, if you are procreation is something that even China is badly needing of. If you've been listening to Mr. China Xi Jinping, you know, the Premier Li Keqiang was saying that their biggest worry is we don't have enough Chinese, and we're worried because if there's no Chinese in the world, there's no consumers. And Tesla needs what? Chinese consumers. Who's gonna buy all those Tesla cars if there's no human beings in the world? Are we just gonna have robots in the world? Obviously not. So I think it's a go, go, go for reproduction. There's a secular decline so far in terms of the demographics. Nowadays, I think that the general US and China is worried about the lack of labor force growth as well. We've got a declining labor force, meaning we don't have a lot of human beings in the world. I don't know if human beings are being replaced with robots. Is that it? Is that why we don't have more human beings in the world? I'm still a human being. I'm not like a robot talking to you. I still have my sense of humor. I don't know. Okay, so the few things that we can see that are likely to outperform, aside from the usual FAMGAs, everyone's been hiding. Their hiding place has always been FAMGA. The Microsofts, the Apples, the Amazons. Facebook had a problem. It was scandalous on their Congress scandal about the teenage suicides. But I'd argue that Facebook still retains that FAMGA status, whether they want to do metaverse. By the way, Facebook World Horizons, they just launched their VR Open Horizon Worlds Open Beta. You might want to check it out if you're a virtual reality enthusiast and if you are a metaverse enthusiast. We are. So I'm going to say that the consumer defensive portfolio is trading at all-time highs. I want to make nice sounding memes or terms or what do you call them? Mnemonics, right? Mnemonics, not memes. So in the Philippines, wapak means kabam, you know, like wapak. It's like, it's actually like, you know, when Superman and Batman, or, you know, like Batman and Robin, when they do those memes, wapak, like you are beating somebody, wapak. So wapak is a Filipino word. I'm not sure if it's a Filipino word or is it like a global English word. I'm not pretty sure, but it sounds like wapak. So the consumer defensive portfolio is wapak. I'm talking about Walmart, Unilever, P&G, Pepsi, Costco, Colgate, Palmolive, and Coca-Cola. So you can see that is, in my view, the most consumer defensive portfolio I can think of. And simply because you expect your money to stay there as if it's cash. I believe that if your money is parking there, you are actually an ultimate bear. Because either you just don't want to short, or you're just really a long-term, I just am a long-only portfolio. And I can understand that. I mean, if you're a Cathy Wood who is forced to just go long, I mean, if you're just a publicly held fund manager, you're not paid to hold cash. So you are forced to be long, and you would say that, all right, since I'm forced to be long and I can't think of a world that is not going to be in destruction world, these are the names that a super bear would hold. A supermarket, a household consumer defensive product portfolio, like your soaps and shampoos, and your toothpastes and your beverages. And perhaps you could add chocolates like Hershey's, right? And McDonald's. The only reason why I didn't put Hershey's and McDonald's here is not because I don't think Hershey's and McDonald's are outperforming. They are. They actually are outperforming. It's just that it doesn't fit into my Webpack name. So I mean, if I put an M and H there, Webpack. I mean, do I have to put an MH there? I don't know. So anyway, a few things to understand. This month, selected defensive indices have been outperforming. Utilities, high dividends. So in the Philippines, you'd actually think that, all right, in a world of bears, I'll just keep my money in a Meralco or a PLDT. I mean, for the Filipinos out here who are listening, that's kind of what the market is saying. Stay parked in Meralco, stay parked in a PLDT or a Globe, Meralco and a Telecom, because the world is gonna go in fire or in hell. I mean, when you're in when you are thinking of Armageddon crash, you're not gonna hide in cash. You're gonna hide somewhere in a Meralco. Now, in the US, I'm not quite familiar, but I think the utilities is Next Era Energy, NEE, which is also trading at all-time highs. I would agree with that because, of course, we believe that any utility supporting renewable and all the projects on renewables should theoretically stay strong. Now, why am I saying theoretically? Because a lot of solar names or clean energy, renewable energy names are getting pummeled to the ground. I think there's an opportunity there, by the way. I would want to tell you about the great bargain hunting opportunities, but I think that it would be better well served to tell you that around March and April, if I am right with the call, that we would get an epic crash. So let's just short the market first with some tactical longs if you really want. Tactical means short-term longs. You're not actually doing a long-term call on a long. We want to go long-term on secular winners, but if the market wants to give it to us 30% lower, why bother buying now when you can just short it first? It's kind of like this. Let's assume you really like Bitcoin and Ethereum. Why don't you just hold your cash? Probably could have a chance to buy it at 3,000 or 2,000 next year. And if it doesn't happen, so what? Then you're just holding and parked in a 5% mini bond, like a utility, like a Meralco, right? Or a 4% in the Philippines. I think in the Philippines, Meralco pays about 4%. Or a telecom like a PLDT would still pay you 5%. So I think that's the reason why the majority, I mean, utilities and dividends are called safe havens simply because they really act like cash. You know, they act like cash. And I would also agree with this one. And I'm sharing this to everyone who'd listen to me. I say stake it in Binance dollars. And then the earnings you get, whether it's Dodo X token, look at all the stable coin staking farms. If you could park in a stable coin and earn 10%, even if that 10% a year could be volatile, because that token could just basically go down 50% within a year or go up 50% in a year, you know, like if you could just stake it and take profits every week or every month and you convert it to the Binance dollars and keep on staking and compounding, I think from a parking place perspective, you really want to do that. I agree. I actually am proposing and I'm actually promoting to stake stable coins because crypto is volatile. But there are digital crypto assets that is not volatile. You could just stake it if you believe that the tokens you receive would have some value in the end, whether you are staking to earn some Binance, staking to earn some Ethereum, and so forth. Like, I think stable coins is a really great staking mechanism. Okay, so and so you want to learn staking if you don't know how. It's passive income. Okay, let's talk about the Webpack portfolio. The Webpack portfolio is Walmart. So it's kind of like for the Filipinos out there. I'm sorry if I'm speaking in Philippine language because like majority of us are Filipinos, but we are of course investing globally. But this does not exclude Filipinos. I mean, this does not exclude non-Filipinos. Everyone in the world understands that safety is the name of the game in a bear market. And the way to do it is things like a supermarket. So Walmart here at about 135 still has a huge revenues. I think it's about 300 billion revenues a year. Just check it again. Is it 300 or is it already 500 billion? I need to check the revenues of Walmart. But the point is, you want to go for where the biggest revenues are, and Walmart is in the top 10 in the world. So 138.5 is a support here, and I believe that it's just in a trading range. It's a sideways range. So you won't make a lot of money, but you won't lose money either. And I think the point in a bear market is not to lose money. Not to lose money or earn a little money. Or if you really want to make money, if you really think that the market is going to go wild down, of course, I'd say just short the markets that you believe should be shorted. That's why I would say short an MSTR. Seems like they are not prepared for a bearish market next year. Procter & Gamble is hitting all-time highs. It just goes to show to you that the world will buy anything that is defensive. You'll notice that for this entire 2021, all of the laggard defensives became super momentum moves to the all-time highs. So 2021, we had the drop in March. And since then, after that crash, the world just kept buying Procter & Gamble all the way. From 120 to 153, like a true outperformer. Same thing happened for McDonald's here. 2021, 210 all the way to 260. So you're seeing that all-time high move for McDonald's, telling you that the world, this is not a reopening play. McDonald's hitting all-time highs is more just about defensive portfolio move. Hershey's, chocolates, also the same thing. Well, if you're a Filipino, you'd be thinking, well, if consumer staples is the name of the game, yes, I would agree with you. In reality, Mondanisen and URC should be hitting all-time highs in the Philippines if the world was really fearful and risk-averse. In a risk-averse world, which is, in my view, what's going to happen in the next 3 months or 2 months, or I don't know, maybe next 12 months, that means that the Mondanisens and the URCs who have a ton of cash flows would be where your money is safely parked. Of course, I think the Filipinos are just fond of dividends. That's why they're probably not thinking about that. But I don't know, maybe I just think differently. But the world thinks the same as me, at least in the US. Hershey's hitting all-time highs. Costco wholesale, that means your pure gold should theoretically be a safe haven. PepsiCo, beverages, right? So beverages, you're talking about URCs. These are beverages, beverage companies like coffees, right? So PepsiCo, all-time highs. Coca-Cola's, 3% divs. Not yet all-time high, but I would assume this hits all-time highs. Any dips would just be bought. Nestle, the largest instant coffee in the world. In case you thought it was Starbucks, of course not. Nobody can actually afford instant coffee Starbucks. So it's Nescafe, Cafe Puro. So your Nestle, Nescafe, essentially all-time highs. The argument here really is not to make a lot of money, but to just safely park my money. That's really how these consumer defensives go. CVS Health is the mercury drug of the USA. So essentially, I don't No, I'm not quite confident, but I do agree that since they're distributing a lot of vaccines, and essentially the business is really just retail, like instead of selling household goods and products, you're just selling health related tablets and boosters and pills. So I guess that's why CVS Health is also an outperformer. Okay, so let's go through. I think I have 5 minutes. Let's talk about what we would also short today. I didn't write it here, but this is what the perks you have if you want to join the Awesome10X community. You do get a summary from me, a few things to understand. I'll give you my summary for today. I'll tell you why. Okay, so it's good to be vindicated with a lot of shorts, right? So we did think that the relief rally was just a bounce. And we do think that if you want to short the high-tech, overvalued growth names, you want to short them till they fall 30% lower, especially if they're not making money, i.e. zero earnings, like they have losses, and they're trading at 30 to 50 times, 60 times price to sales. You've got the likes of Zscaler, Asana, Okta, Monday.com, CrowdStrike. A lot of cybersecurity, I understand, are very good in what they do, but I'm not sure if you're willing to pay 30 to 60 times price to sales for cybersecurity stocks. I believe that they have some leeway to fall. Twilio, cloud-based communications platform, also trading high. So you've got actually a short on all these. I personally would short them. And if you are already short them, you just retain your shorts. No change in views, just remain short. Now, I also said that the hyperinflated IPOs are a short. Short Rivian is still a view that we have. We do think that all this competition between Rivian and Tesla wins. I mean, who's going to buy a Rivian truck? They'll buy a Cybertruck, or they'll buy maybe Ford. I mean, Rivian versus Ford versus Tesla versus GM versus, I mean, do you want to even add all the Too Simple, TSP, which is a Chinese truck, or YMM? Also a short. We're also a short on that. So I'm keeping all my shorts in them. All the rest, all the Tesla wannabes, short them all. They won't be saved. I mean, honestly, even Tesla is hyper priced, but I guess it's very difficult to short something that people love so much. I don't short something that is very well loved, because a well loved stock, or I mean, it will just go sideways. I'm not looking for a 30, 40%. I'm not, if you're not going to fall 30, 40%, I'd rather not short you. So that's just me. Short Xpeng, we gave a short even at 56 actually. I think just continue shorting Xpeng. You are getting a lot of neutral calls in a lot of Chinese names. I think the biggest reason for the short for Rivian is the inability to deliver their vehicles in the next 3 to 6 months. So not only will you have zero earnings, you won't even have revenues if you cannot deliver. So, and even if they do deliver some revenues, it will not be in the realm of billions. And to be trading at 100 billion today, I think nobody in the Wall Street world will allow that to persist for a long time. So I think that it's still a short, 110, 115, 120, 130, doesn't matter. We continue to short. Xpeng is a short still. Any rally should still be a short. I think a lot of US and even Americans and Chinese fund managers, they all thought that the government support with Chinese cars is forever. Well, one thing that Tesla did say is that if there's something that he believes that EV industry should do, it's to be really competitive. And to be competitive is to actually eliminate subsidies. Because even if you eliminate subsidies for solars, even if you eliminate subsidies for electric vehicles, on its own, they should be profitable with scale. So I think that Tesla knows that without the subsidies on these Chinese cars, they would have fallen to the brinks. So of course, China doesn't want Tesla to win. So I don't know. And you have the population problem. As I said, with no population growth in China, who's gonna buy all these Chinese cars? So we're producing a lot of Chinese cars, and who's gonna buy it? A robot cannot buy it, of course. Okay, a robot can drive, but a robot without passengers to drive, it's a big problem too. No change in views. I think that in general, a lot of SPACs had their big runs. Matterport is one of those few names that actually rallied to as high as $36. I think it was due to the niche, virtual reality, the niche on real estate application. It's a good metaverse play. But wait, you're not seeing my summary. Sorry, I'm sharing it now. Pardon. I thought I was sharing the Discord. Yeah, so this is a summary. I'm going to give you a few Discord picks. You do want to short Matterport. I think that, and the market agrees, there was that big drop here, 36 all the way to about 32. That was the start of the short call. And then just continue short. Any rally is still a short, 28, 30. It's now 24. I will not cover. Just let it fall 20, 15. I mean, all the SPACs eventually go down $5. Now, I'm not sure if it's going to go $5, but if the market likes value, Matterport is not value. Of course, we remain shorts on all of our crypto miners, crypto stocks, crypto exchanges out there. Institutional holdings in back, I think it's a short because, why back when you have Binance? So you will just continually have some shorters out there. Duac is not a crypto name, but it behaves like a SPAC that is on steroids. Well, it could go $60, and it did go 65, and it was even as high as 150. But just like MSTR, who failed to make a new high, 1.3 went 900, and now it's about 600 below. I do think that Duac at 150 and then 65, for all things said and done, it's going to be 30 below sometime within a few months. A lot of fraud investigation being asked on whether Duac or the SPAC of Trump could actually persist when there are crime investigations on their CEO and on Trump himself. New York has a lot of subpoenas being placed on these people. Okay, Silvergate is a SPAC. Sorry, not a SPAC. It's a crypto bank, right? Crypto-focused bank. What happens if you lend money to cryptocurrencies and you get paid crypto tokens? And if those crypto tokens fall, well, you are essentially a highly levered bet on cryptocurrencies. So in general, I think like most of these crypto stocks and crypto miners are leveraged bets on cryptocurrencies. And therefore, even if crypto just drops a sideways move of 20%, they'd fall 40%. And that's what you're seeing in their stock price performances. Even worse, if you're a Chinese miner like Henan, who is nowhere to go with a lot of regulation. So these could go like $3. Any rallies would just be shorted. And also, of course, my view is Omicron or no Omicron, the markets would fall anyway. So this is the news about the New York Attorney General subpoena for Trump fraud. This was just released a few hours ago, 17 hours ago. So, of course, Trump would deny all of the fraudulent investigations, but I'd rather just avoid. You may not want to short it, I agree, because it's a meme, but you want to avoid. And it will, of course, dampen SPAC appeal, right? It will dampen it. Now, about the Airbnb's reopening. Okay, so the thing about these is that right now I am bleeding a bit on some of my shorts and reopening. And I think that, Omicron fears could pass, indeed. So perhaps the shorts and Airbnbs could be wrong. But I could be right simply because of the valuation. So because Airbnb right now is still bleeding losses and is still trading at $120 billion market cap. Since the sales of Airbnb is trading also at about 50 to 60 times, my guess is that if the market wants to buy reopening, but they want to buy reopening with cheap valuation, well, Airbnb would not be will not belong in that cheap value play for reopening. So I could still be right, even if I'm wrong about Omicron. I still retain my short on Airbnb. I shorted starting the break of 170. So at $180, I would still say it's a short. That's why I have a little bit drawdown because I shorted 172. It's now 181. You can even short a higher price. If you think that Omicron or no Omicron, reopening or not, there's no value paying $120 billion today for a booking platform, even if revenge travel and frequent longer stays. So I think it's a neutral. To be honest, I'm not that bearish with Airbnb. I'll just be neutral about it. Neutral. Let's talk about Live Nation. Live Nation, I still held my short. I think though that even if there was that relief bounce on Live Nation, I think eventually it goes $90 or even $70, simply because it's not about the reopening play. It's about the lawsuits and the settlements that would be penalties imposed with Live Nation, which is the largest concert producer that was also responsible with the Travis Scott Astroworld concert. So it's company specific. I'm also gonna be seen to still short casinos. Now, I could be wrong. I could be wrong. As I said, I'm not futuristic. I'm not forever correct. But in my view, MGM Resorts is a short. MGM Resorts went up simply because there was news that Amazon was interested to buy MGM. Because MGM franchise has James Bond, and Amazon needs a lot of streaming licenses, IP licenses, which MGM Resorts has. In my view, it's possible that MGM Resorts would not sell that IP anymore. So there's no huge bonanza from selling their James Bond franchise. And so there's already the froth based on that, which I think is going to go down. That's why 51 to 42. And in the same case, I don't think MGM has enough earnings to really warrant that valuation. So they also are in competition with so many US companies. We're talking about MGM versus Caesars Entertainments, which I think also is a short. So in casinos, I am a short. MGM, Caesars, Boyd Gaming. I think this is a short. I'm a bit 3 to 5% down only. I think like I'm 2% down. So I mean, it's not as if like I'm losing my sleep over my casino shorts. I think it's still a short. I don't think there's enough revenues. Win, I think, is still a short. Initially I thought good numbers, but when Win was exposed to Macau, I said, oh no, Macau exposure is a bad thing. I'd rather just short the hell out of it. So Win Resorts, I think, even at 87 or 98 is a short in my view. As I said, I could be wrong, guys, but I also am retaining a viewpoint that what Melco is a short. Sands China is a short. Las Vegas Sands is a short. Las Vegas Sands could rally at 43 like I care. I think it's going to be a short. It doesn't change my view. We gave a short on Lucid, and so far it's been doing well. At 55, we were saying that it was a short. It took some time for it to go down. There were a lot of hype about the delivery numbers because of the pre-orders. But guys, even if you order, just like the Tesla Model 3s in 2013, it took a while before those orders got delivered. So I think that the deliveries will not be happening within the next 3 to 6 months. And these people who paid will be disappointed. So Lucid would fall. That's just my view. Plus, you rally 300% within a month. Well, 16 to 56 or 60 seems overly aggressive move. Seems to fall and warrants a fall. So so far the shorts are printing money, and I am not in a position to cover. I don't think that I should cover my Lucid. Am I greedy for not covering? I just don't have a reason. Why should I cover? I'm not afraid. A subpoena and lack of delivery for the next 3 to 6 months makes me just reinstate my shorts if it ever goes up to 45. I'm short Chinese Rivians, which is TSP. I did short it at 39. It's now doing 35. I think that, these IPOs would eventually fall. I've also given my short call on Dutch Brothers since $70. So far, I'm right. It's now 50. But that was a company-specific call. I just don't believe in coffee chains trading at about $10 billion. They will not upend your Starbucks. I just don't see it happening. Of course, we've got plenty of shorts through Peloton. So I mean, I don't believe it's gonna go up, but in fairness, it's hitting new lows already. I don't know if it's gonna go 30, but it's just that the reason why I'm short is that it is not an affordable business. And it going affordable means that it's also gonna lose a lot in net margins, net revenues. It's not just simply a reopening, stay-at-home thing, and because everyone's already going out, everyone's gonna go to the gym, that there will be less growth. Although Peloton did say less growth, right? I think the best target for shorts is still Peloton. They'll still target Peloton on any rally. They'll still short the hell out of this. Maybe it goes 30 or 20. Still retain your shorts. You don't have any reason to cover. There's still no reason to be covering. Okay, so that's it, guys. I hope that you learned something, and let's talk again next week. Hope that you are prepared for any potential sell-off. Bye-bye.